Hello, everyone, and welcome to this episode of Coffee with Carl. I am your host, Carl Zoellner, one of the attorneys with Anderson Business Advisors, and today I wanted to talk a little bit about the 280A, which is a reimbursement from your business for use of your home office. We've sometimes called the 14-day rule or the Augusta rule. It's a really neat little tax tool that anybody can use. We tend to use it in conjunction with our corporations or our business entities that have the ability to basically reimburse us and deduct the expense. So in that way, you can sort of double dip on certain things. But it's a really nice little tidbit that's there to help folks. So the scenario goes something like this. Let's say I have a corporation, could be C or S. I have a personal residence, and I've got some money trapped in my corporation I'd like to be reimbursed for, because we can reimburse at 0% versus, let's say, paying myself a salary or dividend or something like that. So, how it works is this: my corporation can rent my personal residence up to 14 days and pay me the fair market rent for those 14 days without me having to claim that money the corporation's paying me as income on my personal tax return. So, key piece of this equation here is ultimately the benefit goes to the taxpayer. So, a logical question that a lot of people ask when we're in person is, "Oh, great! So I can do this with all of my business entities." Answer is no. So you can do this with your resident, since you're the taxpayer, one time. If you're in a scenario where maybe you provide, I don't know, some assistance to your, I don't know, parents, brothers, sisters, whatever, you could rent their residences and do this again for them, as a way to get them some pre-tax dollar money versus you paying taxes on the income first and then giving it to them. So that's a good way to use it. But basically, let's just go through a quick scenario and how it works. So ultimately, what happens? I've got a corporation, or LLC tax as a corporation, and I want to take advantage of Internal Revenue Code Section 280A. What I would do is I would get some paperwork in order. So first thing I would do is call a few local venues, like a couple of hotels, and say, how much is it for meeting space, refreshments, an AV package, things like that you're going to have at your house that normally hotels would charge you through the nose for. You don't want the AAA discount. No, you don't want a senior discount. Just send you the invoice and collect a few of those. And then basically, as long as it's reasonable, you can pick one of those. And then you sort of have that amount, that per day amount established to use over your 14 days. Caveat to that being is ultimately, if you're in some place that has, incredible spikes and dips in the hotel rates, say if you're in ski country or something like that, you may want to get those quotes maybe quarterly or seasonally, just to make sure you're still in the quote unquote reasonable range. Other than that, that's the amount you can use for those 14 days. So how does that work? So your corporation, if you have money in your corporation will simply write you a check for those 14 days. You cash it. You don't write it on you don't claim it on, you don't have to claim it on your tax return. That's how that works. Now, the other neat piece I mentioned is it's a deduction because it's an expense to the corporation, just like it would be if the corporation was, say, renting a physical location for its physical presence, right? It's a common, ordinary, necessary, reasonable, and necessary expense of a business to pay a lease to lease space out. So it can deduct that expense as well. So, one hand, you get tax-free income. Other hand, corporation gets to take a deduction for that leased space. One other question that comes up pretty commonly is, does my corporation have to W-9 me in order to deduct the expense? Answer is no. Nope, no W-9 needed. So this is a pretty easy peasy, tax strategy you can use. And like I said, it's tax-free income to you. It's a deduction to your corporation, and you're on your way. So hope this helps. I know that it's one of those little ones that's out there. A lot of folks don't know, or a lot of folks with corporations don't know, or folks who are considering corporations don't know. Pretty powerful tool. I would say on average, you're looking at, when you speak with local hotels, things like that, somewhere between $750 to $1,000 a day. So that's saying, hey, here's a quick little video from Coffee with Carl that, put pretty close to 14,000 bucks in your pocket, tax free. So that being said, appreciate you spending some time with me. Also, remember to like and subscribe, tell a friend, share the good word, and we will catch you on the next episode. Thanks, everyone.